What's up, guys? Welcome back to the channel. Welcome to Crypto Unhyped, the one channel where we focus on the data, not the drama, and we follow the price, not the crowd. My name is Pat, and today is a really important day. We're minutes away from the NFP data dropping. Of course, the Fed and us investors have been going blind in these markets lately. Due to the government shutdown, all the data has been delayed, and there's of course also been announcements that the data that came from October is cancelled. So the data that we're receiving today is from September, and then the next meetings of course take place in December, where on the 10th then the FOMC rate decision will take place, and of course that has dropped the odds for that we will see rate cuts then have dropped immensely since we spoke last time on it was on Tuesday, I think was my last live stream, right? We spoke about it and we looked at it on Polymarket and saw that the odds were about 50% that we will see 25 basis point rate cuts, and things have changed. We will cover all of that, and then of course also go into the Bitcoin charts when the event nears, when the data drops, to see exactly what happens to the Bitcoin price. Now in 15 minutes the data drops. We take the time until then to really go through everything that's been taking place since Tuesday, what we have to look forward to, and what we can expect from this event as far as the Bitcoin price goes. So let's go into the news. Hope you guys all having a great day. By the way, here on X, I'm live streaming on X for the first time. If you're viewing there right now, warm welcome. And to all you guys who are new to the channel, hope you enjoy the analysis. And if you do, consider joining us here, Team Crypto Unhyped, by hitting the subscribe button, follow over on X, and all the good stuff to not miss any of my updates. So of course, yesterday I already updated you here on X that the FOMC minutes were released yesterday, and that of course has been a very confusing statement by the Fed. There has been no clear line of whether the Fed thinks that we will see rate cuts in December or not. And we'll get deeper into that. Here, first of all, this is the event that is coming up now. The initial jobless claims, the big one, of course, the non-farm payrolls. And then we see also the unemployment rate. And tonight, or later on today, 1600 here, or 4 p.m. Central European time, we get the existing home sales. A lot of data still missing. Of course, CPI, then retail sales, and PPI as well. It's of course all delayed, and we had an announcement that we might not even get the data from October. So let's get into the news right now. If you want to catch everything that I'm looking at as far as the macro data to watch goes, you can get it every Sunday in our Unhyped data sheet, which will be available every Sunday at 12 p.m. Central European time. You can download it. The link is down in the description of my videos, or you can just go on the X profile as well. There you always see it here at the top. You can just click that link, and that gives you always the latest version of the data sheet. All you got to do is drop your email and you get it straight to your inbox. And yeah, guys, so here you get everything, the Bitcoin levels that I'm watching, the on-chain data that I'm watching, the November performance, for example, for this month. It's always updated to the current month, of course, and then the macro data to watch in the coming week. Of course, we didn't have any announcement about the NFP data dropping this week yet, so you don't find it in this sheet, but everything that will be announced maybe today or tomorrow about CPI data and so on will be in the next one for Sunday, and there you will then also see exactly what my take on it is. It's always down here just below. And yeah, here you could see already the FOMC meeting minutes here, that it was taking place yesterday. And now let's go look into what happened there exactly. So you can see the headline on Reuters: many Fed policymakers at last meeting were opposed to December rate cut. So there's been a mixed bag while that meeting was taking place. And there we see that Fed's October 28-29 meeting led to rare split dissent on policy. Lack of data has clouded US central bank's policy outlook. We will see that in a second again in Polymarket. It's not looking great from that perspective. Here we see many participants were in favor of lowering the target range for the federal funds rate. So at least half is what they were saying of the participants were in favor for the rates to be cut next month by another 25 basis points. But several others opposed the rate cut outright and expressed concern that progress towards the committee's 2% inflation objective had stalled. So we had a really mixed bag there during the FOMC meetings or minutes there, where half of, at least that's what they're saying, half of the participants were against rate cuts. And now, of course, that took a hit on the odds and what the market is now pricing in for December. What we got here left on this report. While the minutes suggest a large number of the Fed's 19 policymakers did not support a rate cut next month, it does not give any indication of how close the split was among the committee's 12 voting members. So we don't really know how many were against it or not. And from the 12 voting members, when the rate decision took place in October, then of course, when they looked at the data from September, then 10 were in favor for rate cuts, 2 were against it. And now it looks more or less like it's 50-50 or something like that, at least, that they have no clear picture yet, as they are blind just like us without any of the data. Of course, now we get some of the data, but then we can see here that the chance now, according to Polymarket, where we looked on Tuesday, it was still 50% that we see 25 basis points rate cuts. Now it's a 68% chance that there will be no change, that they will maintain the rates as they are right now. 31% that we do still see the 25 basis point rate cuts. Right, and then we have a next announcement coming from the US. Of course, the US canceling October's employment report after shutdown prevented data collection. So the US Bureau of Labor Statistics said on Wednesday it would not be publishing the closely watched employment report for October, but will combine non-farm payrolls for that month with November's report. There's of course a negative there as well. We will get some data, but the data will come out at a date where it might be already too late. So that means October's unemployment rate will never be known. So that's obviously not great news for investors, as that's a great data point for the Fed always to make their rate decisions. Establishment survey data from the current employment statistics survey for October 2025 will be published with the November data. So we will get it in combination with the non-farm payrolls data for November, which we will then of course get in December. And the dates are they looking at the 16th of December to release this data. But as we know, the Fed is taking its rate decision on December 10th. So they will be basing everything on the September data, which of course makes it less likely that they have enough data on the table in order to make a rate decision where they then decide, okay, we can cut. That's why, of course, the odds are now stacked against us, that it's more likely that we continue with the current rates. Now we look at the event that's taken place today. Yesterday, due to all this mixed outcome from the FOMC minutes, we're really holding support but at resistance currently, and that has been the case here during or pre-CPI reports and pre-NFP reports in recent history, that Bitcoin has always been pumping into those events. And don't worry guys, we'll be covering all the charts, all the key levels, pivot points, everything you need to look out for to not miss any opportunities. And at this point, of course, I got to tell you as well, none of this is financial advice, purely for educational and entertainment purposes. Always do your own research. Now let's see what we got here leading into the event. NFP preview by investing.com, delayed September data could still tilt the Fed's decision. So we see NFP report expectations is that we get 50,000 jobs added in September, and the previous was 22,000. So if we get less jobs added, ironically, that's usually good for risk assets, as it puts more pressure on the Fed to cut rates. If we see that more jobs have been created in September than 50,000, then that takes the pressure off the Fed, and then that adds to the odds that we just saw on Polymarket that we don't see any rate cuts in December. And we know, of course, the Fed has also announced that quantitative easing will start in December as well. 1st of December, they will start turning on the printers, start buying assets again, and that usually is followed by rate cuts. So really interesting to see, although if we don't get rate cuts in December, then it's still likely that the Fed will continue cutting rates in January at least, once we catch up and get all the data that's necessary to make these kind of decisions as well. So we have to look out for this, of course. Now the NFP report, it's coming live. Let me just keep my eyes here on the time as well. 5 minutes we got left till the report comes out. And of course, guys, I keep you updated on all of these things always before they take place over on X. So if you're a subscriber here on YouTube, make sure that you're also following over there to not miss out any of my updates. And yeah, guys, I'm going to be live on both platforms from now on at least 5 days a week. When anything major happens, then I will, of course, make emergency live streams as well and let you know exactly what's going on in the charts. Right, guys, now I will go into the charts in a second. Let me just set up some stuff here. As I'm still new, I still have to figure out some of the software and everything. But now let's switch over to the charts here and see exactly what's going on with Bitcoin leading into the NFP release right now. Last stream, we of course spoke about the key levels here on the daily chart and on the smaller time frames. I'm going to keep my eyes now here on the 4-hourly chart and the hourly chart going into the event, and let's just do a quick recap of what we talked about on Tuesday. Tuesday we were of course discussing the strategy if we are now confirmed in a bear market. Historically we are in a bear market as far as the 50-week SMA goes, that it's confirmed. Every time we close below it, historically, it was clear confirmation that we're going down to a bear market, but is always followed by an underside retest of the 50-week SMA. Guys, the video is available on the channel. If you just go into the live section on my channel, then you can watch the video from last time. I cut it as well, so you don't need to go through all the waiting and stuff in the beginning. Click on it, check it out, and then you get a really clear view of my strategy here now for this current stage of the market. If we go and reclaim that 50-week SMA and all the key levels, the pivot points that we have in front of us, or if we find a rejection there, that it's a great opportunity to exit the market and start shorting the market. I covered it and just check it out. Let's go into those levels now and see exactly what we spoke last time. So here we were right at this candle, on this 4-hourly candle. The stream was right around 8 o'clock, so the candle had about an hour left in it, and we were saying that this is a key point here now for an underside retest of the previous range here in combination with the 21 EMA, and at the time the 23.6 on the Fibonacci retracement of the current downtrend was aligned there as well. Therefore a natural spot here to get a rejection, and also a very, very important spot for the bulls to reclaim as support, to then have a shot here to break out and get back and reclaim the diagonal support line and all that stuff above here, the 50 EMA and so on, to then have a shot at reclaiming support on the daily chart as well. So we can see that that's exactly the spot we're getting rejected here. As again, we printed a lower low here on a closing basis and on a trading basis. We now printed a lower high as well. We got the rejection at the exact same spot. Basically, we can see the dynamic resistance line right here. Then we see the rejection here right in combination with the 23.6 and the 21 EMA. So very similar to what we saw on Tuesday, but of course we're also printing a lower high. The probability of the overall trend gives us a clear sign that that's more likely that we continuing downwards to lower price targets, which of course we also established are in the 85 to or even 86 to $84,000 range, where we have massive support coming off the weekly chart. Here we can see it very clearly in the form of the 38.2 on the Fibonacci retracement for the entire bull market from the December lows to the current highs. And then if we take the April lows to the current high here, that swing, then we see that there is the 78.6. So very strong area here, in combination as well with this strong range here, where we then revisit the 50-week SMA, broke the previous all-time highs afterwards and printed new ones. So this is a really good spot here to look out for an underside test of the 50-week SMA and that massive cluster of resistance here, which of course also consists of the prior range closing lows here, the 23.6 on the Fibonacci retracement. So a clear area here between $101,000 and right around $103,000 to $104,000 to really look for a rejection. Could go slightly higher than that into the $106,000 to $108,000 range, as that would be then the underside test for the range that we lost here, and of course a test of the 38.2 as well, especially if you're holding the 61.8 here, confirm it as support. That level on the Fibonacci retracement gets a very statistically a very high hit rate. So a really interesting area here between $101,000 and $106,000 to look for a underside test here, potential rejection, and a huge opportunity to exit the market in case you missed the opportunity before, or to start shorting the market as well, of course. All right, it's 2:30 now. We should have the data already, and we see that the non-farm payrolls came out much stronger than expected. Of course, the anticipated was right around 50K. There were 119K jobs added in September, which of course now takes pressure off the Fed to cut the rates. And that is of course historically a bad sign for Bitcoin. For that, we go into the hourly chart now, see if we get an immediate reaction of the price. So far, we're still holding here support in the form of the 50 EMA on the hourly chart, sitting right below the resistance line here of the downtrend currently. And now we, of course, can potentially find an opportunity here to find a setup where it breaks down and goes down to support again, or potentially continues with the trend into the $85,000 to $86,000 range. Pivot points are clear here as well. We're looking at the prior high here in this downtrend, and there we can see now that we of course want to break this key area here of the 23.6 that we just looked about. Hourly closes above 93,570 bucks. Give us clear indication that we're going up at least to test the $96,000 range. And that's then of course where it starts getting interesting on the larger time frames as well. 4 hourly is here, clear pivot point right at 93,200. There we see that same level, the 23.6 Fibonacci retracement, and of course also here the prior high in this downtrend. Therefore, if we can get above that, then that's the first step to a trend reversal, and then we can start looking at higher price targets on the high time frame here on the daily chart and so on. And this is of course a very powerful pattern as well if we break down from a falling wedge pattern and then reclaim it as support and test the resistance. And there we see also what we just saw in that area on the weekly chart, the $103,000 to $106,000 range. There we see massive resistance here right at $106,000. So even if we reclaim now the 61.8 and the support of the prior falling wedge here, then we still have a massive cluster there, and that combines beautifully with what we saw on the weekly chart here for an exit opportunity. These are the options on the table to exit the market there if you're stuck in any positions, or of course to start shorting the market. And of course, if then that gets flipped and confirmed as support, that's a huge opportunity here again for the bulls to reclaim support and to continue this trend. I spoke about it last time. Of course, the 50-week SMA now has a 100% hit rate. It's something that myself, I've been talking about since I started making here videos initially back in 2022, that's the clear confirmation for a bear market to start and a bull market to end always for Bitcoin. It has been the case every single time so far, that when we close below it, that it was over. We were going down to a bear market lows. But I broke it down very clearly in my last stream, and as I said, the video is available on the channel now for YouTube. Sorry guys, pressing buttons here that make no sense. Yeah, logistically still getting used to this streaming and all the commands and stuff that you have going on, so cut me some slack here. But yeah, we can see here, I'll just pull over the data that just been released now. Let me just go into this mode here. And here we can see it very clearly, right? We see that the expected numbers were 53,000 and the previous was minus 4,000. And we're looking at 119K, so very strong September as far as job creations go. The unemployment rate sank here. And then we see that the average hourly earnings dropped as well. So it's a mixed bag again, putting pressure on the Fed, but the Fed is still flying blind as far as the October data goes, and therefore really hard to make a decision based on data from September, as we don't know what happened last month. And then the data that's coming out for November will of course be out with a delay. It will come out after the rate decision has already been made on the 10th. Therefore, again, even if that data comes out, it will not have any impact on the Fed decision about the rates. So really, really tough thing here in the market right now. Initially, everything looked really good, right? We were holding the 50-week SMA. Everything looked great, but that government shutdown, of course, that delay of the data has really put the market in a position where investors are scared to enter the market because they just don't know what to expect from the Fed. And the Fed themselves don't really know what to do, as we saw by the FOMC minutes report. But yeah, guys, there's a lot of opportunities here now. We, of course, got to keep our eyes out for more numbers coming out. We have existing home sales coming out a little later in about an hour and a half, if I'm not incorrect. I will be updating you on X about that. And yeah, guys, now let's go through the levels again here across the time frames for Bitcoin to really see what we can expect here. And first thing here on the weekly chart is, of course, that's the area that we all have to keep our eyes out. We can cover it again here. Let's go into logarithmic, look at the previous cycles. And this is what I taught you guys, or told you guys last time here, right? We had a brief scare here actually in 2021 where you just buy an inch close below the 50-week SMA, but immediately recovered here with a massive bullish engulfing, continued upwards to print our cycle top then. And there you see that scenario that I'm talking about right now. Underside test of the 50-week SMA, great opportunity to exit the market and start shorting the market. And yeah, and that's what we're looking for here as well, right? To get a bounce here. What's the likely area to get a bounce from? The current area is a very strong support level. We see the 61.8 in the area. We see that very strong range support in the area, very strong horizontal level that served as support and resistance here historically. And of course, then we see below there that massive range here there where we came back down to the 50-week SMA. And that lines up here with the 78.6 and the 38.2 here on the Fibonacci retracement. So this whole area here where we are right now between $92,000 and $88,000, then down to $84,000 to $86,000. Very logical support areas from where we can see a potential trend reversal. If it then, of course, if we can reclaim support and get back above the prior high, or at least an underside test. So many opportunities showing up from that side. To spot it earlier, we can of course do it on the larger time frames. We can see that we printed here a couple of hammers in a row, usually a reversal pattern if it gets followed up with another bullish candle here, and that at massive support would give us then a strong indication, if we can get a big bullish candle here to follow these two hammers up, then that we're getting an attempt here to underside test the prior range that we lost here in the $101,000 range. So we see opportunities on the smaller time frames, of course, what we spoke about last time, that we will get the underside test here. So we had we see it here again on the 4-hourly chart and the hourly chart, that we had a beautiful bounce off here of support, came down to test the underside here again, more visible on the 4-hourly chart. And now we see here, if we get a clear rejection now after the data dropped, come back down to support, of course, then likely if we get down there and start closing below here $88,800, then we start going to go even lower than that, down towards 85 and 86k, and from then I'm pretty sure that we pick up massive demand in that area and we'll see a bounce then. Of course, we can go even lower than that, but from logical support here, that area where we're currently at, down to $85,000 is very, very likely that we will see a bounce then. And then, of course, we have to look out for the pivot points where that attempt of an underside test turns into a potential trend reversal. Here on the 4-hourly chart, we can see very clearly we're trading in this range sideways here now, basically getting rejected at the same spot. We want to get above the prior high here in the downtrend, and that key area here right around $96,000. Want to get back above the 50 EMA here, the prior dynamic support that now of course will show up as strong resistance. That lines up here also with the 38.2 of the Fibonacci retracement for this local downtrend here. So massive cluster here and a very, very strong area once again to keep your eyes on, to either find an opportunity to find a rejection there or a break above there, and then that of course would drift over into the daily chart here, that as we're getting an underside test here in this area or in test of that area, and it would put us back above the 61.8. Then of course the 50 gets a high hit rate. There we see the 21 EMA lining up and the underside of that range. So 96,000 on the smaller time frames, very strong resistance, and then 101,000 becomes very strong resistance on a daily chart. If we can reclaim this range here, then we're right back above daily support, and and just above there, right around $103,000 still, is the 50-week SMA. Of course, we've seen historically, we had events where we fell below it, then briefly closed above it again, but couldn't confirm, like we saw here in 2021, right? Or March 22 actually, the top was in 21. And there we closed above, immediately couldn't follow up with another bullish candle, and then here printed this bearish pattern here, followed up with another bearish candle, and then made it clear that we had an underside rejection of it basically. And then if we take it back to 2017, there we see we had the underside test as well, but immediate rejection, sorry. So The bullish scenario would of course be if we get to that area back above the 50, start closing above the 50-week SMA, and then follow up with another bullish candle, reclaim support at the same time on the daily chart. That makes us look very bullish again. But as far as the trend goes now, we know that the monthly trend is still intact. Like we can see here, we just get out of logarithmic. There we can see that this market structure is still clearly higher highs and higher lows, right? We can see it very clearly here, coming in with higher highs and higher lows, still holding the previous low. As you know, guys, I'm focusing mostly on a closing basis here, ignoring the wicks in these key scenarios. And there we can see that we're still holding the prior low here. Also, if you look at it on a linear chart, it becomes very clear, and we're respecting the trend line still. So as long as this holds, the high time frame market structure is still bullish. But then if we go down into the weekly and everything else, then of course we can see that we had a break in the market structure where we were printing higher highs here. At this point, we broke it. We couldn't hold the previous low and are now bearish in this structure and in all the other time frames below it as well. The daily chart is bearish. The 4-hourly chart is bearish. So from that perspective, of course, the probability is still that we're going lower to lower price targets and very logical support coming in here in the $85,000 range. If that doesn't hold and we don't manage to get back above the 50-week SMA, then of course we have to start looking at our bottom targets. I will cover it again for you guys. I can see there's a few of you around. Obviously, if you're new to the channel, really nice to have you here. And if you want to catch these kind of streams, which will be now 5 times a week, then make sure to join us here in Team Crypto Unhyped by hitting the subscribe button and all the good stuff down there. And if you really want to help me out, also smash up that like button. That is something that really helps me out with the algorithm more than you know. And yeah, I can see there's some action in the chat as well. Welcome everyone. A falling wedge signify, well, a falling wedge is, as you know, guys, if you've been watching, I'm not so in love with all these patterns that your favorite X guys, crypto X guys like to post all the time. But really, what it shows you is the market structure, right? We're printing lower highs and lower lows, and in general, you could say that a falling wedge pattern is a bullish pattern that has a high probability to break out bullish at the top of a trend. But we fell below the falling wedge pattern, so we would have to reclaim the prior support and yeah, and then continue upwards to test the resistance again. And these are the levels that I just covered on the daily chart, basically. And yeah, guys, let me actually change this here. I see it looks a bit messy. So let's get into this again here. What are my bottom targets? Last time we covered it here, we saw that the 200-week SMA obviously has a massive hit rate to be very close to the bottom. And a lot of you guys who've been watching for a long time know, of course, that I came very close to predicting the exact bottom in 2021. And that's not to toot my own horn or anything. That's just based on pure Fibonacci, right? We took the Fibonacci retracement for the entire bull market as it worked in 2017 as well, and said the target will be very close to the 78.6. The 78.6 at that time was right at, where was it here? 17,000, just over 17,000 bucks. And my bottom prediction was 17,500. And that is, of course, based on these two indicators, the 200-week SMA and the 78.6 on the Fibonacci retracement. If you look at it in 2021, after the top was in, we retraced the entire bull market. We could see that we came just down to the 78.6, fell below the 200-week SMA. 200-week SMA, of course, such a high time frame. The 200 is on a complete tear, going only pointing up, never flattening out, never moving down, and therefore it becomes more likely that we start falling below it here. And we see also that the 78.6 has distanced itself from the 200-week SMA due to that steep curve, and therefore it's a tough guess to always tell you where the bottom is. No one can tell you that. And if someone says they know exactly where it's going to be, trust me guys, that person is just selling hype. We're Crypto Unhyped. We're not doing this here. We're just doing some educated guessing, as most analysts should be doing. But yeah, guys, then we have to look for confluence clusters in the charts. And if we take the entire Fibonacci retracement from bottom till top, there we see that the 61.8 aligns here with a very, very strong horizontal area and the 200-week SMA is in that area now as well. Of course, that will continue to move up, could distance itself a lot from this area here currently, and then by the time the Bitcoin price gets to the 200-week SMA, it could even be closer here to the 50 already. So the only thing that really makes sense here, as per usual, is a DCA strategy if you want to improve your position for the next bull market. And there you can see there are very, very clear, strong confluence clusters in the entire chart. I just see someone's asking here, pump or dump. I hope I explained it with this. Guys, we had the data puts pressure on the Fed. It takes pressure off the Fed in a way, puts pressure on the Fed in a way. The FOMC minutes yesterday was a mixed bag as well. So I'm expecting the trend to continue as it is right now. Logical support, as I said, is in the $85,000 to $86,000 range. And the pivot points are very clear in the charts, guys. The easiest way for you to always look at it, if you are still in a downtrend, you just look at the market structure, right? We're printing lower highs here on the daily chart. Then you just look where the prior high was. And then if we manage to close back above there and confirm by printing a higher low as well, then we had a shift in the market structure and then we're bullish again. So you look for those pivot points when they get broken to get a confirmation above there, then you have a good opportunity to catch the reversal of the current trend and to have a nice target to the upside. But the momentum here continues to the downside. If we can't clearly get a reversal, at least on the daily chart here, it will likely continue down to that area of 86 down to $84,000. But yeah, let's go look at some more examples here from where these indicators have been extremely precise to predict cycle bottoms. And there we go here to another cycle that of course makes a lot of sense after we put in the 20K top here in 2017. We did the same thing here once again. We came down to the 78.6, right? Which was right in the same neighborhood of the 200-week SMA. So there you can see that this combination of these two level, or that level on the Fibonacci retracement for the entire bull market, and then that 200-week SMA gave you a really nice idea of where the ballpark for the bottom is. And then, of course, it makes most sense here to not try and guess if that's going to happen again, but average out your Bitcoin position price by DCAing back into the market. And yeah, guys, depending on what you do, if you're shorting the market, taking those profits to DCA back into the markets, there's different strategies that you can utilize. And talking about strategies, I'm going to get going with Josh very soon again. He's in the chat, I just see. Shout out to you. And yeah, we're going to start covering a lot of different concepts as far as bear market strategy goes, bull market strategy, and basic trading and technical analysis strategy. There's already a whole playlist that you can find down in the description, the journey from beginner to crypto analyst, where I went through all the basic chapters with Josh before. So if you're interested in that, down in the description, check it out. And yeah, guys, I think I have it covered here for the key levels. Let's go back once again to the smaller time frames here. Clear pivot point on the 4-hourly chart, right at 93,200. If we can get back above there, we can expect to move upwards towards at least $96,000. Above there, the $100,000 to $101,000 range comes into play, an underside test of the prior lane range here on the daily chart, where we see a strong cluster right here, right at $101,000 with the 21 EMA, the 50 on the Fibonacci retracement, and of course that key horizontal level that we want to reclaim as support. If you want to catch it really early on the hourly chart, you can see also here now the current significant high here in the range that we want to get back above here. Actually, we can move that pivot point now as we just printed a lower high. So we want to get back above there, the 23.6, the dynamic resistance line, also back above the 50 here. So there the line is right at $93,000. Then we can expect to move here also towards the 200 EMA in alignment with the 38.2 on the Fibonacci retracement here for this downtrend. And then we would have very strong resistance there. Getting above there would then mean that we're clearing the key area on the 4-hourly chart, and that we can see then an underside test of the $101,000 range. Okay, guys, that's basically it here for me for today. Quick reminder, guys, make sure you get your data sheet. It's in the description down below. You can click on it, drop your email, and you'll get it sent straight to your inbox, or You can find it in the last video as well, or always here on X in the top in the description. There you have the link. Make sure to follow me over there as well to stay up to date with my full analysis. Okay guys, now time to wrap it up. Hope you enjoyed the stream. If you're new to the channel, hope you enjoyed the analysis, that you got value out of it. Make sure to join us here in Team Crypto Unhyped by subscribing and all that good stuff. And I will be back for the weekly close on Sunday. So my streaming schedule is going to be Sunday to Thursdays now. Fridays, Saturdays I take off. I will still be posting videos on those days, so keep your eyes out. Content coming out your way 7 days a week from now. Now guys, I'm out of here. Hope you have a really cool weekend and enjoy yourselves. And as always,